The safest place to store money is thought to be a bank. However, did you realize that every time you spend, save, or borrow, banks profit? Nevertheless, banks are excellent places to store your money. There are many methods for banks to profit from you, regardless of whether you take out a loan, spend your money, or save it. Due to the complexity of the financial system, banks engage in several peculiar behaviors that you are unaware of. Not that we think using a bank is a bad thing. The 6 financial truths that banks don't want you to know are all we want to share with you. Hey guys, welcome to another exciting video by Finance Aligned. In this video, we'll share with you these truths, and you won't believe what the last truth is, so make sure you watch this video to the end to find out. Before we continue, kindly like this video, subscribe to the channel, and hit the bell icon to stay notified of more exciting videos just like this one. With that done, let's get right into the video. Always check your bank accounts. Don't put off checking your bank account simply because you're too busy or lazy to do so. It's an important aspect of your life. There can be some unreported, concealed charges on your account. Be sure to notify your bank right away whenever you discover a charge that is not yours. Your bank has 48 hours to transfer the funds back to your account if you file a report within the required 90-day deadline. It's not something your bank wants you to know. They might try to drag out the procedure or avoid it, but you should stick to your guts since you have legal protection and they have to give you your money back. You're losing money every year by saving money in the bank. Although you've probably heard that banks are the finest places to store your money, no one has ever told you that doing so results in a yearly loss of money. This has to do with inflation, which is the rise in the costs of products and services over time. It has nothing to do with the bank fees you pay on your purchases or someone stealing your money from the bank. What it means is that an item you could purchase today with a $50 bill would cost significantly more in 10 years. If you believe the money in your account is secure, you would expect that its worth would either stay constant over time or even increase due to interest. Every investor wants to increase their portfolio in line with inflation, but most bank accounts don't do this entirely. In fact, you lose up to 1.95% on the value of your money each year as a result of inflation. We're not talking about the money you invested to earn returns on some financial platforms. Rather, we're talking about the cash you have in your savings or checking accounts that isn't being used. Bankers are not your friends. We're sure before now you thought they were your friends. They know you by name. They often call you, chat you up, show you love, and adore you. They remember your birthdays and celebrate you on your anniversaries, so you're hooked. The truth is that these folks don't love you. They're simply playing out a well-rehearsed script, waiting for the right moment to strike. A banker could become friends with a customer. He does everything to win his or her trust, then makes them feel he's on their side and not on the side of the bank, and later talks them into taking loans they didn't even plan for. Can you imagine taking on a $10,000 line of credit you never planned for? That's what happens with this kind of friendship with bankers. All they care about are the figures. They get targets from their managers and supervisors. If they don't meet these targets in record time, they lose their job. So before signing up for any loan, make sure it's what you need and want. Never allow yourself to be blackmailed emotionally with fake friendships. Your money in the bank is not physical. You could have tons of money in the bank, but these are merely figures and electronic records. This is because the banks use your money to do business. They give out this money in the form of business loans, car loans, or mortgages. To you, your money is at the bank. But in reality, your money is in other places, making extra money for the bank. This reality came into play in 2008 during the recession. Out of panic, people went to the banks demanding to withdraw their money, but the banks had no money to pay everyone. The banks could have that amount in liquidity, but in the event of a crisis when everyone makes a run for their money, the physical cash will not be there. And this is a result of a policy that is called fractional reserve banking. This policy allows your bank to lend out your money to those who need it in the form of loans and mortgages. Does it mean the banks are not safe places to keep your money? Not at all. Your money is protected by insurance, and the government is there ready to step in should anything go wrong. So if you have money in the bank, feel free to go to sleep with your 2 eyes closed. But don't forget that having money in the bank is not like putting money in a box where you can access it at any moment. Your money is busy making money, but this time not for you, but for your bank. As an individual, you can access your money whenever you want, but if everyone wants their money at the same time, no one gets it. Hey, tell us other truths that banks don't want us to know. Let me know in the comments section. Meanwhile, like and subscribe to this channel for more content like this. let's proceed with the video. Banks earn from your credit card transactions. First, every time you swipe your credit card or debit card and make purchases, banks make their money through processing fees. You may not know this because you were only debited for your actual purchase, but the merchant pays the fees. The merchant could also have included these fees in the sales price because he wouldn't want his profit to come up short. Let's look at it this way. Let's pretend you made a purchase of an item at a cost of $500 and you paid with your card. If the merchant is charged 3% on every payment made with the payment card, that means a whopping $15 goes to the bank. The bank gets this money just for providing the machines and the convenience of payment. Do you think the merchant will be glad to have the $15 taken off his profit? You're the one paying this fee, and we'll show you how. Let's say the item was supposed to sell at $480. The business owner must have raised the price to $500. The additional $20 will cover the 3% deduction that will go to the bank for card transactions. That's taking into consideration that most people would rather pay with their cards. Secondly, the bank makes so much money through your credit card. There's a reason banks offer so many incentives just for you to sign up for a credit card. What you probably don't know is that the interest rates on your card can be raised at any time. The average interest rate on a credit card is $17, but your bank can decide to make an increase to maybe $18 or $19. They could do this after giving you 15 to 30 days notice. Often, you don't get to read these letters that contain lengthy legal jargon, so you ignore them. The banks get away with this while feeding off your ignorance. We're not suggesting that the idea of a credit card is bad. The credit card is a useful service that provides convenience for most of us. It's become a part of our daily lives, but care should be taken so as not to accumulate debts. That will be a dangerous place, so be sure to pay off your debts every single month. Fees on foreign transactions. Another way that most banks make money from customers is through foreign transaction fees. Your financial institution will not tell you this, but when you travel outside your country and make purchases with your credit or debit card, you will have additional charges. Some card programs have coverage in some countries outside of your own, but if you use their services in the countries where they have coverage, there will be no additional charges for your purchases. If you don't know this, you'll be milked. Most banks won't disclose all of these secrets to you because if you knew, you could dump them and go for other money options. Now that you know the truths that banks don't want you to know, if you're really serious about making your financial freedom a reality and not just a dream, then we hope to see you in our next video. So that's it for today. What do you think about this video? Kindly let me know what you think about this video in the comment section below. Don't forget to like and subscribe to this video. Also hit the bell to receive more updates. See you next time. Thanks for watching.